With us, Sarabjit is also going to be joining us on the line, but Shell has some more fine print of those earnings.
Yeah,
Shell.
so effectively the tax rate this quarter around has come down significantly. It's come down to 21.7% versus 25 odd percent. So that's gone and helped the company's profits as well. And that's one important thing. I think it's made a difference of almost $17 million, $7 million net. And as I said, our overall estimate, if you compare the dollar revenue number this time around to the actual numbers, the dollar revenue numbers are up ahead of our estimates by almost $15 million. EBIT numbers come in at 12.8 versus 11 on a quarter-on-quarter basis. That's a very big upward move when you compare the EBIT number on QOQ. If you look at the attrition is coming at 17% versus 16%, so no major move there. Utilization excluding training is at 83% versus 81%. A few more details. If you look at the revenues from the Americas, they've come in at 46.9 versus 45.3, which means it's gone up by 130 basis points. Revenues coming in from Europe is pretty much remain unchanged, and the revenues coming in from the rest of the world have decreased. They've come in at 23.3 versus 24.7. Now, as far as the revenue split by industry goes, there's been a slight bit of a fall of around 100 basis points as far as communication goes. The revenues from manufacturing have been unchanged. Revenues from technology, media and entertainment have gone up by 60 basis points. And BFSI revenue has come in at 13.3 versus 14.1. So that's come down slightly in this quarter. All in all, Deep seems to be a good quarter. The revenue from the top 5 clients is coming at 23.2% versus 24.8. So that's come down by almost 160 basis points.
Absolutely. Sarabjit, your first cut on this. Operationally a strong quarter as well. There's a component of tax outgo as well. That's a help on the bottom line front. But otherwise, on all metrics, it seems to be a clear beat.
Yeah, I think it is clear-cut beating the expectation, probably because of volume. Actually, I would say we were looking at Q-on-Q 2% growth, which came in at around 2.2. So I guess, and obviously it's volume-driven growth, which has led to, obviously the subsidiaries which they have acquired also would have, I think, improved. But I think it's more to do with volume, which is benefited margins also, because if you look at utilization Q-on-Q, there is a improvement of around 2%. So I guess it's overall good business dynamics improving in the quarter, which has given a good set of numbers actually.
What do you expect on the stock tomorrow, and more importantly, what's your call on this counter?
See, right now we are working only with 19 numbers. We have not incorporated with 20, which most of the street guys would have. So from 19 perspective, we believe that even if I take into account today's good set of numbers, I believe that max to max it is a reduced kind of a stock on 19 numbers, unless this kind of a margin improvement percolates to next year also, because we are working with the currently margins of only 15%. So if I have to incorporate, probably it will become a neutral stock from here on. So I think the play on Tech Mahindra, even we know more than volume, is on operating leverage. So I think if it shows a sharp sign of improving and moving towards the 16 plus and 18%, then obviously the stock prices will adjust accordingly. So Tech Mahindra, I think, even if I adjust for next year's numbers for improvement in some profitability levels, it will be max to max neutral actually.
Fair enough. Parthiv and Sarabjit, thanks so much for joining in. Watch out for management commentary. That press conference also scheduled to start in just a couple of minutes from now. We will be cutting live to that and getting you more details. For the moment, completely out of time on this edition of the Trading Day. As we